Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, July 28th, 2022. I'll just rifle through a handful of things that I'm watching and doing right now, including the equity markets. We're going to start there. This has just been a nice trading time frame for active traders. This is that 5-minute chart I showed you yesterday. Remember, we rallied up. There was the breakout FOMC meeting. We had that consolidation. That was the post FOMC noise for about 45 minutes, followed by a solid breakout candle above that trading range. And then, as mentioned, you put in negative divergence on that 5-minute chart, exactly at that previous reaction high. That was a catalyst for this pullback. I had laid out, highlighted those targets in there. And so this morning we came at and opened up right on that, or came down right to that. The top of that trading range. Again, very solid resistance right there. It was reactions all the way through there, especially this trading range. Buyers stepped in as they usually do. It's a good support like that, rallied it up here, and we're back to that previous high. You've got, of course, Apple and Amazon and Intel on deck tonight. So quite the dais there for earnings in the lineup. And my guess is we'll probably see a little nervous profit taking today before the close. Just traders again. It's hard to say if there's more shorts in the market. We know I highly suspect that yesterday with that big blowout 4.5+% gain in QQQ. But how many of those shorts were squeezed out yesterday? Bears are on the run. Overall, price action recently has been constructive. Me personally, I've just closed out. I've been, day trading and active trading the NQs off this and the NQ chart, of course, and just closed out along. And even going to take a little small short here, which I'll close out before the close today. Apple, Amazon, Intel, they can go either way, and they're of all of them, this would be, I would think, the biggest night. We had Meta last night, but Meta doesn't move the needle like it used to. Meta's only a $433 billion company. I say only, it's still a big company, but Apple's a $2.5 trillion company. So what is that, about 6 times the size of Meta, and the NASDAQ 100 and S&P 500 are cap-weighted indexes. So Meta's not going to move the needle. Moved it somewhat. So point being, and then you have Amazon at a $1.2 trillion company. So those are the companies that can move the needle tonight. They can move it either way. So this is confusing to you. Remember, we've had nothing but bullish check marks. The case for more upside in the coming days, a week is still pretty solid. And we'll have a much better idea after those big companies report tonight. I already went over in detail the kind of the longer term, near term outlooks. I just wanted to share with you that we've got those earnings tonight. So if you're actively trading, or if you've been swing trading, and let me go back to a 60-minute chart. This is I'll use this one here. So we had that initial, off the lows there. That 305 was the initial target. We overshot it by a hair. We're back there. I'm going to put a line right here now because it would be that line I had on the 5-minute chart. We pop it. The next resistance zone is here. It's the top of that trading range. Remember, I was targeting from after pivoting short to long here on that low. This was my initial target, and then my longer term targets are still the primary downtrend line off the highs there in QQQ and that 330 level right there, and the 200-day moving averages. But between now and then, it's just not, it's probably not worth the risk to take a shot. Let me show you something else here. This is a 60-minute chart, which we were just looking at. I flipped to a different board, and you gotta watch out for these divergent highs and lows. Sometimes they get burned through. In an uptrend, they usually do get burned through. By burned through, what I mean is, divergence is when prices are making equal or higher highs. Like that's an equal high, that would be a higher high, and so with that, as long as the indicators are making lower highs, and that's what they're doing here. So you have negative divergence. It's what I call potential but not confirmed divergence. Why? Because I like to get a bearish crossover on the PPO. That's this blue line here crossing below the white line at a level below the previous one. So as a momentum indicator, it's pointing higher, straight up now. That means the momentum is up, and it could continue up, and then you take out the divergence. So something to look for. And again, you've got some decent resistance overhead. So if you popped up today after earnings and hit that resistance, you're going to have that divergence in place. It would have to carry quite a bit higher. On the daily chart, really you don't see it much there. There's that trading range. You get a level here about 317, and then you have the my what I'm still calling my maximum upside targets for this bear market rally. If that changes, if we get to them and things are still looking okay on the charts or good at the time, maybe I'll continue to hold out. But as of now, on swing positions, if we get there, that's where I'll be closing out. But I'm lightening up in front of earnings. That's what I wanted to tell you based on where we're at right now in my active trading account. There's a downtrend line right there. There's the 200-day simple move, or I'm sorry, exponential moving average, and the 200 simple up top there. So if the trend lines hit again, depending if and when we hit it, you're talking about another 6% or so, and that's that. So covered that ad nauseum recently, so no need to spend much more time on that. Just wanted to show you those 60-minute divergences right there, that potential but unconfirmed divergences, and the fact we keep tapping on this 308.50 level, and I don't see this market screaming in front of Apple or Amazon unless there's just still a large amount of trapped shorts that are nervous and going to try to squirm out in front of earnings and just cut their losses. But I don't. I think we got a good squeeze out of them yesterday, and I think we'd probably see, if anything, maybe a little drift into the close day, a little profit taken, even if we pop 3048. All right, so that's that. Trade it as you like. Let me show you another idea for you, a new one here. So I've been covering for a while now. I've been giving you the Ethereum crypto coin itself, or the crypto itself. This is a 6-month chart, 3-hour candles, and highlighted this basing pattern here. Very well defined, powerful breakout with a gap. That was a big time buy signal right there. You also had, of course, divergence like you did on Bitcoin and everything else, divergent low there. Breakout, but the target zone targets were this downtrend line and the bottom of that zone right there, or this support level, or was former support, now resistance. That's at about 1719, and we're right there right now. So you've got the downtrend line a hair above. You've got the bottom of the gap, or the top of the gap. See where we went down and then gap down right there. And so the gap was backfilled. And the momentum's strong in the cryptos right now. As I told you, and I've been saying this repeatedly, they've been trading in near lockstep with the markets. Both the risk on NASDAQ 100 and Bitcoin and all the cryptos, they topped in November right together, and they've been moving down in lockstep. So I said to be bullish one is in long, one is to be bullish and long the other, except you're going to get more bang for your buck in the cryptos. They move up and down more. But I want to point out here, you have now negative divergence at resistance. That's a near-term target. There's certainly a lot of momentum in there, but I found before I was searching on interactive brokers, I couldn't find it, and I found the futures. Sometimes they use different symbols than you get when you go online, or they weren't offering it before. So here it is, ETHUSDRR. They call that the full title is, I guess it's Ethereum US dollar. Let me see here. Let me just hover on the. Whatever. That's the symbol you have to type in there. Or if you type in Ether, ETHER on your interactive brokers, click on index, and then the one that says CME, you'll see it there, and then click down on futures. If you trade futures, you know how to queue them up. So look, we're a hair above that, but I showed you Ether, the actual coin is right there. This is a shorter term chart. These are the futures. So you can trade that ETH I showed you there. But if you're a futures trader like me, anytime you take something other, if you take a stock, an ETF, it burns capital in your account margin, because it's counting against you. Futures are considered a commodity. Again, if you're a futures trader, you know that. So this is one. I'm taking a shot at this today. It's highly counter trend. These futures the cryptos are flying. The market's strong right now, but we're right there, as I showed you a minute ago on ETH, at hair below the trend line. You've got the negative divergences right there, and if it carries on through, then stop somewhat above there. It's certainly a counter trend trade, but there it is. There's the negative divergence 60-minute chart. Oh, pullback targets, of course. So you've already taken out, there's the gap right there, but then, that's technically the top of the gap right there, but you have much better resistance there, and that's always the levels I like to target. If I see a gap, but then right above it is even better resistance, that was a small little level, and that's where we're at now. So there's a trade idea for you. Pullback target would be the bottom of the gap. That was also support right there, 14, almost 465. If things get ugly, and Apple and Amazon could certainly dictate that, or after the close today, you could come on back and backtest the top of that breakout range right there, the trading range. So those are two potential targets if you want to take a counter trend trade, or if you're long Ethereum, and I'll show you. I know you guys all don't trade the futures, so you have the ETHE. That's not it. ETHE, Grayscale Ethereum Trust. From this chart, it doesn't look like much. You had that basing pattern there. There was a breakout candle. Looks good there. 60-minute chart, but you do have, when I zoom in here, oops, I've stretched that MACD or PPO out. You get some pretty significant divergence. Again, unconfirmed, but divergence nonetheless. And if you get a reversal here, then that divergence could pull Ethereum ETHE all the way back to that around that 921-ish level. That'd be about a 28% drop, or just a shallow target if you want a quick pullback trade, something right there. ETCG, if you're in that one, that was their first to market variant. Also at resistance, I give you this bullish falling wedge back here. We're in the wedge. Started highlighting the cryptos as trade ideas there, and there was our even within the wedge is where it was first mentioned. We're up. This thing's rallied 107% right into my 1168 target. I can't think of a better time to book some profits. These cryptos can continue to run, so don't get married to a short if you're going to attempt a short pullback trade. But if you do, short here at 1168, it's actually at 1194 as I type or talk. I'm sorry, I'm not typing a text or a post. I'm actually recording this one. It was 1194 a second ago, 1188 now. I'm just trying to zoom in. Close enough. Momentum fueled overshoot. And pullback target would be just above. This was my previous target, 981. I'm going to move that up now because we overshot it a hair, about 997. Remember, you don't want to actually try to squeeze out. If you're looking for a quick pullback trade and you're targeting 997 former resistance, which is now support, you want to cover a little bit above. And there's also that gap right there. So I'd be covering a little before the gap. Is where I'd do on that one. And then GBTC, it looks good. I mean, it's strong Bitcoin Trust, is their other version, still have not filled the gap. So Ethereum has led the charge on this one, on the cryptos. There's still a big old gap to be backfilled on GBTC and that trend line. Those are all still potential targets for me. And so Bitcoin looks better. Ethereum is just, the case for Ethereum is it's at pretty significant resistance. And Bitcoin Trust, I do always go over BRR. When I trade Bitcoin, that's what I'll use, the Bitcoin futures, BRR. We're at that previous reaction high. So I'm going to put a line there for you right there. See, just like in the stock market, we hit that previous reaction high, 24,180-ish right there. There's the thin zone. It doesn't show as a gap. Remember, futures trade virtually around the clock, but GBTC gapped way down because that was a move overnight. But there's the top of the gap right there, and it's still a potential target. This target I think will be hit, but again, if Apple and Amazon kind of rowl the market, scare thing, we could run back down a little bit. So either way, I just pointed out, if you've caught a good part of this run in the cryptos, you could book some profits here. You can raise stops, of course, or you can let it ride. We may just burn through here. Like I said, there's overall the price action in the market's been nothing but constructive for now about 6 weeks. Check mark after check mark, but again, big earnings on deck tonight. So good time in my opinion, especially if you've profited handsomely over the last few weeks with the market or any of the other trade. Well, let's talk markets. Or crypto. good time to maybe just book some profits, sit back, and pick it up tomorrow or next week. You know, you can always get back into those positions. Worst case scenario, they rip and you miss out on a move, but you locked in profits. Nobody ever went broke taking a profit. That's what I like to say. And the metals. We get to the metals. The euro is not moving as much as I wanted to see. We did get that spike after the FOMC meeting. I told you Powell reverted to his true nature. Said it's ingrained in his DNA to be dovish and hawkish. Dovish, I'm sorry. And you know, he had to put on the hawk suit recently just because he was forced to crow. But of course, everything that they did yesterday, the market implied or took that to be outright dovish. And so the stock market rallied, the euro rallied, but the euro's slowing down. So what I did is, again, this is just active trading stuff. I've had a good run here. I've been long the metals. I took some profits on silver today. This is just a 10-minute chart. You can see here 2 weeks, 10 minutes. Look at that divergence forming there. It's got a nice run today. Silver's up 6.3%. And this is what it looks like on my hourly chart. There was that divergent low right there. We went kind of ground around for a while, popped that 1879 level I showed you the other day, popped this even bigger level. That was big resistance, 1932. And that should open the door for a run up to 2060. However, bit stretched, and that 10-minute divergence plays out, yeah, there's a good chance you get a pullback. So if you want to get in on board silver, if you want to take profits on this big run today, you know, very overbought near term. That usually doesn't stop silver, but it can certainly slow it down. And there, pull back to that 1933 level would be an objective entry if we get it. Gold also running, not as much as silver. Like I said, I usually will overweight silver when I'm bullish on the metals, on the precious metals, because it tends to move in the direction of gold just a little more. But another reason I took profits on gold and silver today is this. You have that downtrend line on the 60-minute chart of GC. That's what we're looking at here. Gold futures, positive divergence there. So, you know, constructive. And it's been moving up since then. I think the trend line will get taken out. I think we will go up to 1806. However, we may have a pullback first. Usually the initial tag of a trend line, if it hasn't been touched in a while, you're going to get a little selling in there. So I think a lot of eyes are seeing the breakout above 1745, but you can get a little pullback there if we have a reaction off the trend line. And then palladium for sure. Let's see here. Let me grab that one for you. PA, you're rallied into this. This is a long-standing target here, 2089 right there. 2089 resistance. It was resistance. It was a key level back here, and now we have this bearish rising wedge here. This is a 60-minute chart. PA, again, palladium futures, or PALL is your ETF if you want to trade it via an ETF. But you've got that negative divergence, pretty steep divergence, and at resistance. So maybe looking at a pullback here in palladium, and took a shot on a short trade on that one because of that. Been trading it long recently, along with platinum. And let me give you platinum. Time permitting, I'd go through the ETFs as well, but if I cover all these securities and I look at the futures and the ETFs, it'll take forever. So platinum was a long right here on the breakout of that small downtrend line wedge, and then again off the divergent low there. I was targeting these two levels, 878.35 and 896.60. We came very close so far to that other target, but just like palladium, we've got some pretty big divergences. We could continue to thrust up, get one more thrust, but just a little too close for me. So I took some profits today because of the divergences that I see in everything I just showed you on silver and palladium and all that. If we pull back, there's a trend line that would provide for an objective long entry on a pullback to that trend line. And if we thrust up there, again, that's pretty significant resistance, so we're probably going to get a reaction. So to me, it's all about risk reward. You know, sometimes I get close enough to my targets and I look, okay, am I going to try to eke out another, you know, 0.5 or 0.75%, because that's about what it was. Oops, I deleted that. I tried to remove that trend line. Let me put that one back. It's going to be on or around where it was, not exactly. So the answer is no. If I start to smell pullback coming in the metals, then and we get close enough like we were today, then I'll just close it out. Because the risk reward's not good. There's no sense in trying to hold out when you have a nice embedded gains off the initial entry there. Not even the lows off that initial entry. It's up about was up about 8% almost, and no reason to give up nice profits like that to try to eke out another 0.5%. So that's it. And remember, if the euro has put in a significant bottom, which it's way too early to say, but there's certainly the potential, then yeah, gold, silver, platinum, palladium, especially gold and silver. Platinum and palladium they are more industrial metals. They have higher industrial use. Platinum, palladium, and platinum. They're primarily used for catalytic converters, emission controls in cars, and so that's dependent on the economy. Of course, there's Russia whole factoring in there. Big palladium producer and platinum producer. Euro US dollar. Let me just give you that. The 60-minute chart. So the case is still made. We came off this divergent low, hit my first target. We've been in this consolidation zone. If we pop it, we probably hit up to T2, T3. Now, if we head up to T3, that's at 101, we'll call it about 106, right? And then remember, on the weekly chart, we had this big major long-term support zone right here. So if we get up to that, see, this is why a little small stuff can sometimes be very important, because if that seemingly minor price target on the 60-minute chart, that max target right now of T3, that's going to get us back up and above that, and then it'll give me that what I called that potential bear trap scenario, a false breakdown. Euro being at multi-year lows against the dollar, going back to parity, and boom, that would be very powerful if we can recover that, because this will be then a whipsaw, aka false breakdown. So work to be done. It's kind of stalled out last week or so there, and if that happens, then you want to get back into the gold and silver and precious metals. All right, what else do I have for you? There were the grains. They've been doing well lately. We've been long those for about a week or so. There's corn, long-term uptrend line right there, negative divergence. Like everything, corn, ag commodities are in a bull market, make no mistake about it. This is part of the whole inflation trade. This is the thing Powell just was missing, even though he probably doesn't do his own grocery shopping in his position. Probably has people doing that for him. He had no clue. Probably doesn't even pay his gardener. But so that's why the Fed and those people living in the bubble, they were clueless. But if all they had to do is take a look at broad-based commodities, things that are the biggest inputs to the consumer price index and the PCE, the one they follow, they can that personal consumption index is what the Fed uses, but it's going to track the CPI over time. And all they had to do is just look at everything going up: services, commodities, food, energy, and all that. But again, I've talked on that ad nauseum when it was happening, and now that's already a done thing. The Fed's already admitted to the missing that completely. But all right, where am I going? So yeah, nothing goes up forever. It was very overbought and had its nice correction, and then put in this divergent low recently, hit my first target. So as I said today, that may be it. You've got certainly some resistance there, but I could easily see odds favor a reaction here. We don't have to have one. I think we'll probably get one, and then thrust up there. Next target's 25.88, and then maybe a back test of the trend line and/or this 27.22 resistance, or former support, now resistance. So there's potential for more there. You've got positive divergence, and long term you're in a bull market. Remember, we came off a multi-year, actually a decade plus bear market in commodities. So this whole inflation thing was priced in 110%. I was quite bullish down here on commodities as a whole. Ag commodities, corn, we're getting long corn, soybeans, everything, because you had these beautiful divergent lows. Then you took out the bear market trend lines. Then you started taking out previous reaction highs, which said this was no longer a bear market rally. And not only were the charts indicating that commodities were looking at a significant bottom and a trend change, but then when you start taking out previous reaction lows on long-term charts, that confirms that it's no longer a bear market rally. It is the beginning, early stages of a new bull market, and that's where we're at. So we pulled back. There is that big wedge I just showed you on the daily chart. This is a weekly chart of corn, and there's a pullback. So you want to get on board the, I told I cooled off. When we started getting these divergent highs, that's where I stopped buying and started selling out of the swing position, trend positions in commodities. But now is a time to nibble. It can go down lower. Yeah, I'm still mixed. I told you I had the DGP, or no, DJP, I think it is. This one of many commodity ETNs that I follow, and said, look, we can probably come down here to that 31 level. Maybe, maybe not. So we've already taken back that 34.63 level. We've already had off the top. Remember, this is a broad-based commodity ETF, probably one of the most representative, because a lot of the others are too overweighted energy, oil and gas. And so they kind of give you a skewed reading. This is a very well diversified commodity ETF. Down 23%. Okay, and yeah, it was priced in negative divergence. So the correction came. That was the abatement of inflation. That's one reason we didn't get another 1% hike out of the from the Fed. That was not priced into the numbers in June, but it was there. So this is, again, I call this my real-time inflation indicator, one of those. And so that'll be reflected because there's such a lag time in reporting and all that, and that'll be reflected going forward. So, and I think the Fed, there's got to be somebody on there smart enough to say, hey, even though we had that super hot June numbers, guess what? In reality, crude, natural gas, everything fell. It's just not being reported yet. And so I think that's one reason you didn't get that 1% that a lot of folks were clamoring for. All right, that's that. So commodities still in a bull market, and maybe another leg down. It's too big to be a bear flag now, but there's the next resistance right there, and that's where oil and gas are probably gonna, oil and gas look to be stalling out here. Oh, let me get on that, and then I'll wrap this video up. I know I'm all over the place, but all right. So yesterday I told you, big old symmetrical triangle pattern forming on crude. This is CL, crude futures, 60-minute chart, hourly candlesticks. And there's the uptrend line. Now I set a break above that, and then you had benefit of the doubt 98.83, and you might want to use that as a stop level. What I didn't notice then, and I'm looking at now, and that still may be the case. Look, we're exactly there. We're on the back test, but what I wanted to point out, I'm going to zoom it before I zoom in, is we did it, we popped it, but with negative divergence. This is about equal highs on the RSI there, slightly lower highs on the PPO, and higher highs in prices. So that increases the odds this breakout may fail, because yesterday I told you if you pop it, and you may want to stop out if you're short crude. We're still profitable. These were our entries on crude right here. Boom, boom, these two. So it's still a profitable trade. Came close to back to break even today, and we back tested. So I said, look, if you're a bull and you break out and you back test, you can go long there. You can also cover a short there on a back test if it broke out. But with this divergence, I'd now say the odds are pretty decent we could have a failed breakout. I'm going to let you guys be the, determine what you want to do for crude right there. We back tested almost perfectly and bounced so far. So it's not too late if you, see the breakout and you want to cover your short for a profit right now. I'm going to sit tight with these divergences. I'm going to sit tight on my swing shorts, see if we can break back down into the triangle. If we do, it's going to be a pretty vicious bull trap, I think, and send us down and then below the triangle pattern. I also factor in, the longer term chart of crude oil, which is what you're looking at here. This is WTIC, West Texas Intermediate Crude. These are crude futures. Long-term chart, weekly chart goes back for all the way, 2 decades here. But it's an end-of-day chart, so it's not reflecting today's price action, which isn't much. You're looking at weekly anyways. And what I'm looking at here, see this, that, and that. That's negative divergence. That's a big divergent high on the weekly. This is a chart. I've had this. All these lines are old levels. I've shared them in the past. And I'm just going to circle. Let me color this up here for you. Last divergent high was there. Last one I had before that was there, and then there. If you want to measure these out, I'll do that for you real quick. Just kind of give you an idea what happened. 36% drop in crude from that divergent high. That one was a 77% drop. I'm sorry, that was not. That was a triangle pattern, breakdown of a triangle pattern there. That was a divergent high right there. And that was a 26% drop, divergent high right there. And that was a 91, almost 92% drop. Obviously, Six Sigma event right there. That was COVID. And that's when crude went negative briefly. Crude futures did. So that's it. So there's a potential certainly for a much larger drop, or we can continue to push up. Maybe the divergence grows larger. That's what it does sometimes. But all right, you know my thoughts. So I'm sitting tight on that short trade for now. Give it a little more room. It really shouldn't, to be honest with you, at this point, it shouldn't take out today's highs, because then that was the divergent high, and that's probably going to carry on us back up to our entry point if we do. Finally, on a related note, natural gas. Okay, so natural gas. I pointed out recently this what looks to be a buying climax so far has been you get a surge, everybody piles in, last of the shorts can't take the pain anymore. You want to look for volume patterns to confirm that too. So not only you want to see a parabolic spike up in a buying climax, you also want to see a huge surge in volume. That indicates, that's indicative of a buying climax, which as the name implies, it's aka blow off top. And again, I said it may be just a near-term top, or it could be more lasting. We'll see. Somebody in the comment section the other day said exactly what I thought. Look, I don't think the news flows can't possibly get much worse. A couple weeks ago, the big talks was the pipeline was shut down, and that Putin wasn't even going to restart it, and Europe was going to choke and die over the winter because their stockpiles are already low to begin with, and they wouldn't have enough natural gas. They were going to have to ration, blah 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 blah. Well, he turned the pipeline on, but then said, okay, it's going to go down to 20% capacity. Got a turbine issue, right? So again, if natural gas stopped going up on that news, yeah, there's pretty much nothing with a few exceptions, other than completely cutting the pipeline off. Then there's nothing but good news now, because it's starting to move down on. When I say bad news is bullish for natural gas. And anyway, I just want to give you, here's a level right there. We're flirting with this level. It's 8,368 right there. And then you have that next, remember, we already broke the minor trend line right there. You have the more significant trend line. This is only an hourly chart, but you take that out. Next support other than the trend line, you have 8,069, and then it's pretty thin down here. We've been stair stepping up. There's a lot of pivots or reaction lows, but I think we could make a pretty swift move down there. And when I look at the longer term charts, potentially a lot more. So anyway, I'm still sticking with that one for now. Okay, that's it. 33 minutes on the button, but I packed a lot of stuff in there. So there it is. There's a stock market, there's crypto, there's commodities, precious metals, you name it, multiple trade ideas, and the key is, spread it around. Some of these trades, the only guarantee I ever give anyone in this game, and from my analysis, is I will be wrong, and I'll be wrong a lot. Key is being right more often, and not even. You don't have to bat over 500 in trading if you're using proper money management. You're using nice risk-reward ratios. You risk $1 to make $3. You don't risk $1. If you risk $1 to make $1, then you do need to bat above 500, or you're going to lose money, right? You have to make 50% of your trades have to be successful. If you are using attractive risk-reward ratios, risking $1 to make 3 or more, then you don't have to get them all right. But so far we're batting over 500, and just also remember what your volatile trades are. Natural gas, Bitcoin. I see the comments, and people get smoked on these trades because they're, Natural gas is going to go up and down 10% or more in a day. Not every day, but quite often. That's the norm. I've seen it go up 20% in a day. The stock market's not going to go up or down 20% in a day. Gold's not going to go up or down 20% in a day. But Bitcoin, natural gas, those things do regularly on a daily basis go up or down double digits in a single day, and then they do it again and again and again and again for the next week, 2 weeks. So I always say know what you're trading and keep your position size commensurate with the volatility and the risk reward, your profit and loss potential. And then also spread your bets. It's just like in investing, diversification, asset allocation, trading different securities that are uncorrelated is every bit as important with a swing trader or active trader as it is for an investor. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.